Good afternoon, traders. Joe Baker. Why don't we talk about what happened today, why it happened, is it going to happen again? Uh, First things first, the news. Okay, this is where trades, as you've heard me, many of you know I've said this 1,000 times. Always remember this: overcrowded trade. We had the worst news today. We had consumer confidence at an all-time low since they've been keeping records since 1967. So, is that bearish? Well, you'd think so because the consumers aren't going to spend anything if their confidence are down. Now, I know most everyone I'm speaking to right now probably has made some type of adjustment in their living as well, myself included. Just don't feel right about spending a lot of money because it doesn't feel comfortable. So it does hurt. I know I'm going to be spending less just because everybody's spending less. It's kind of the thing to do. When everybody's feeling good, you're spending money, everybody's spending money. It's the thing to do. As much as we don't think we are, we all kind of act in herds. And there's a lot of books about herding and, how people act in crowds. And it just is kind of a self-fulfilling prophecy. That's all. So, at any rate, we know this year's Christmas season, which is what retailers get sometimes 50% of their business on, is going to basically suck. Okay, hate to use that type of language, but it's going to. And we know what the numbers are going to be going forward. They are going to be unpleasant as well. Better word, huh? So at any rate, I was kind of short into that number. Maybe kind of short. I was short into the number, and worked out well. Everything was fine, and kind of watching the whole structure play out. And it was kind of a time zone as well. We do have the morning time zones. The 9:36, 9:44, 9:50, 10 o'clock time zones, which kind of makes the whole morning structure. So anyway, everything was working out. They had a lot of bearish people on. You could see the kind of bearishness kind of just radiating over the market. And, the trade kind of made sense that we were going to have another down day, especially, yesterday falling into the close and all that. It's set up that the trade was just way overcrowded. It's really all that happened. And when one person wanted to get out, everybody wanted to get out. Now, Japan was talking about cutting rates today, and that obviously would send the yen down, okay, their currency. That would drop the yen spot. And not the dollar yen, but the yen, all right, the spot market on the yen. And that would obviously run our markets up because of the U.S. stock market relation to the yen. And that came out just after about 2 o'clock on CNBC. Now, whether that news was out there or not, I don't know. But it could attribute it to something. And then the short squeeze in Volkswagen, sending up the DAX, ridiculous levels. So everything, it was almost, quote, a perfect storm, whereas the sentiment and the mood was very depressing on the forefront. And then we had, technically, we had some heavy breakouts. I know that, Japan rallied overnight off its lows. DAX rallied off its lows, obviously, due to the Volkswagen stuff. So I think everybody kind of wanted to cover, and there's just not that many contracts available unless you push the market up. So let's go over what happened structurally. Okay, everything was working out fine. Here's your 15-minute low, your 15-minute high, your 1 hour low, 1 hour high, and I made this a little bit bigger. This is your open range average. Okay, so this is the average of the first 15 minutes. Okay. And this is the average price. This is at 872.75. Okay, so what happened today? We came up, we came down, did our typical thing, pulled back at around 10 o'clock on that news, and we took out the first hour low. Now that was a structure sell, and you can see this coming in at the 862 level, and it falls all the way down. Now we had these ranges here. I don't know if you guys can see this, probably not. Anyway, we had a first hour low range target of 52 and a quarter. We take out that, would go down to the 42.50 area, all right, 43 area. So basically, the targets were already there. These print early in the morning. Come back up. We hit the first hour low, came back down again, first hour low, came back down again. Then, as I told you in the series before about these, this is the whole structure of the market. Once it gets up inside, it wants to come up and test the 15-minute range. It's exactly what it did. Came up, tested it, came back down, came back up, went up to the average. Okay, it went up right up to this level here, came right back down, and obviously first hour low, came back up here, got inside again, started climbing up, then it started taking out the 15. Now this is where things started to change. Took out the 15-minute high, okay, popped up to the first hour high, took that out, okay, that's showing strength. That's like, hey, I have enough power to blow through this. Pulls right back down, right to, you got it, the 15-minute high, and that's all she wrote, folks, and that was it. It was gone. Okay, very similar structure I've showed you time and time again. Now we had first hour range at 891, second range 901. I think we had one up here earlier. Was a print was 929. Was another extended print, and then we had to go to manual charting, and I actually brought it up to 35, and it went to 42. Unbelievable. So at any rate, that's what happened today. And before I run out of time, let's get over to the daily chart. Okay, I've got about approximately 3.5 minutes to talk before I'm out of time. Okay, these are our trend lines. These are our channels that we're in. And what happened here is this was the low at 834. We came down, we tested that, we blew back up, came back down to this area, blew back up. This was that ABC structure downward, okay? And then we had to take this area out, which we did. We actually took it out. We got down to about 825. And the market pulls back up, but as you know, I've used these pitchforks a lot. And what did we do? We went from the lower median to the upper median. That was it, guys. All that. Okay? Kind of makes it look kind of silly, doesn't it? All we did was we went from the lower median to the upper median, and you know that's a trade, and you know this is right where you're short. Okay? 42. All right, is right where this was on the daily, on your pitchforks, okay? For those of you that have pitchfork software that does auto forks, I don't know many that are out there, we have them, but you can draw them on your own. You don't need the auto ones, you can do them on your own. Now, what would turn this fork? You got it, guys. A takeout of 42 to the upside would push this up and would turn this whole fork downward. Okay, so then this would kick back here, this would kick over here, and then this would go up, and then that would put us in an upward trend channel. Okay, so right now we're still in a downtrend in spite of that absolutely phenomenal, eye-popping rally. Were we long today? Absolutely. We trade anything, and you have to adapt. You have to treat trading, you know, I've always said, trade it like a game, treat it like a business. And that's all it is. All right, guys. As you know, I'm doing all the levels. Please go over to the blog. You know, you're welcome to come in, try out our trading room. Just shoot me an email. I'll send you over a passcode. You go right to our website, log right in. We trade the S&P futures all day. And you're welcome to the 3 levels. I do the NASDAQ, S&P, and Dow breakouts, breakdowns, and targets with all the levels every day. Just go over to the blog, log in, put your email address in. You'll get it for free. All right, guys, I'm running out of time. I got to shoot this off, and I will talk to you tomorrow.